set myself the target of making 30 videos over 30 days. Now, the vast majority of the content's going to be around personal finance, financial markets, investing, and things that I think people should know when they're looking after their own portfolio. With that said, there are going to be a few videos where I just speak to the camera or, be very frank and very short about what we're talking about, because the aim here is to be really unstructured, to just let the videos flow, and I really don't want to spend a lot of time on the production value or even try and direct where I want it to go. Now, the reason for this is that I just want to make some short videos to keep myself active. A lot of the reasoning behind it is that I want to get better with how I present information, and this is one of the ways that I can do it. So first and foremost, a lot of the videos I've covered in the past, they've typically been slideshows, and then I've just spoken over the top of them. And a lot of that information in the presentations is really aimed towards people who are just starting out in the stock market. They want to build their own portfolio, and at the same time, it's really educational, but it's not really in depth. And I've really questioned where I want to take some of these videos in the past. You see, because I host a radio show, and one of the things I found on the radio show is that when I communicate numbers and figures and facts, because superannuation isn't the most interesting topic, covering insurance on radio is terrible, and a lot of people just want to know what are company names that they think that they should be investing in, at what price, and then how long should they be holding that asset. I think there's just so much more towards the investing space and a lot of that educational content. Now, at the same time, I've seen plenty of videos by not only Australian YouTubers, but also some of the international ones. For some reason, the Google algorithm hasn't worked out that I'm a financial services professional. So a lot of the content and a lot of the ads that it gives me, it's just not relevant. And I also think that for a lot of people who are just starting out, it's very easy to get mixed up with the wrong kind of crowd. I've seen videos for day trading. I've seen videos for options trading, futures trading, value investing. But with that, I think it's really important that people start with, number one, their goals, number two, their risk profile and their preference for taking risk, and then really look at building a portfolio. And it's a big question of, well, what do you actually include in that portfolio? And the truth is that, you've got to have diversification. You've got to build it based on asset allocation, because there's plenty of research that says that that's going to drive the vast majority of returns. For example, when people come out and say that there's a 10, 15 or 20% return, a lot of that has to do with the fact that 70% of all shares in the market go up when the market goes up. And because shares are considered financial assets, or, it's a very broad term, but the thing is, when people are investing in those, they're really looking at their options between cash, defensive assets, government bonds, corporate credit, that sort of thing. And then you have equities. And because people look at equity portfolios from a very broad perspective, we're talking a good share portfolio has at least 20 securities in it, preferably 25, and 30 can be a little bit too difficult to manage. But even within that, there are stocks that form a core position. And what I mean by that is, when you look at the ASX 200 and you look at the top 20 stocks and you look at the sectors within those, or the sector weightings within that index. For example, financials is about 35% when the market was at its high, and now it's about 31%. And that excludes real estate investment trusts. Now, the thing about it is, if you're looking to build a portfolio, you've got to have a serious process around your sector allocations and whether you're going to go with market leaders or whether you're going to look for smaller fringe companies. And both of those have positives and negatives, like they're just trade-offs between the two. I've seen plenty of portfolios where people are heavily overweight CBA, whereas others are overweight NAB. You know, some people want to be overweight financials in general because of the dividends, the yields that are available, and the fact that because they might either be in pension phase or their situation around tax, they get the benefits of franking credits. Now, I suppose the main takeaway here is that, you know, when you look at a lot of people who are starting out in the stock market, typically the number one mistake that they make is that they go straight for the small caps, typically because they don't have much money to invest. In that small cap space, you know, we're talking micro caps, so anything under 50 million, for example. When they go there, some of these companies don't have earnings. And I tend to think of it from the perspective, if anyone has Foxtel, there's a couple of shows on there that the Discovery Channel used to have about American Gold Rush and that sort of thing. And it's a handful of guys digging gold out of the dirt. And, you know, I sometimes feel that that's what some of these small mining operations are like. You know, they're just tiny speculative companies that, you know, unfortunately some young kid is probably gambling way too much money on them. And what happens is, if that's their first step into investing, then if it turns sour, that they typically tend to think that the stock market's either rigged, it's gambling, and I just think that that's not the right approach. The right way to do it, very broadly speaking, use a top-down sector approach, have a diversified portfolio, build some core positions, and it's okay to take some speculative risk. And I'll break down what I mean by that in other videos. But the thing is that, you know, you manage your risk by your position sizing. So if you go and put 100% of your portfolio into some speculative company, whether it be a mining stock, a biotech, or just a technology company, and it doesn't work out, then there's a fair bit of risk for you. At the same time, I think a lot of videos on YouTube don't consider the tax impact or even inflation and, you know, reweighting portfolios and doing that efficiently over time. I see a lot of videos where people are just talking about which stocks are good, what they're buying, and then, you know, making a lot of disclosures about, you know, make sure you don't buy this company, but I'm still talking about this company because I think it's a great idea. You know, it just blows my mind that that's what it is. Anyway, this video is getting a bit long. If you like these kinds of videos, you can always subscribe, write some comments down the bottom, and we'll take it from there. Thanks.